Welcome to the chat. So many options, doing much more. What if I told you that less is more and more is less? This is where the paradox of choices come in. There are so many pairs and instruments to trade in the forex market. However, an abundance of these instruments doesn't mean that a trader has to be involved in all of these instruments to be successful. The paradox of choices suggests that an abundance of choice requires more effort to choose and can leave us feeling unsatisfied with our choice. And the forex market creates this dilemma for a trader because right here, as you can see, we have so many instruments, we have so many stocks, we have the CFD, we have the crypto, and so many other instruments. In fact, some brokers other than Tickmill have much more instruments. So now, to be a successful trader, must you trade all these pairs, stocks, CFDs, and so on? As a beginner, you would think you must, but the clear answer is no. Because in the forex market, less is more. Less is always more. As we are aware of, the forex market is the riskiest environment in the world. Aside from being in a cage locked with a tiger or a lion, the riskiest place an individual could find himself is the forex market. And every trade, you expose yourself to risk. Every decision you make to either buy or sell, you expose yourself to risk. So trading all these pairs means that you are exposing yourself to numerous risks, unlimited risk, which is at the advantage of the market makers. So to outclass them, outsmart them, and outthink them, a trader needs to be smart in his decision, rational, and decisive. That is why we have come here for this discussion today. You can see Euro USD, USD CAD, USD CHF, USD JPY, GBP USD, USD CNH, NZD USD, so many pairs on this tab. Do I trade them all? No. Can you trade them all? Maybe, if you want. Should you trade them all? In my opinion, no. Because there are the few selected pairs. Not all pairs are created equal in the forex markets. Some pairs have more volumes than others, and for the sake of clarity, we are going to highlight the pairs that I advise you look out for and follow to be able to refine your strategy with the movement of the pairs. Some pairs have tighter spread and some pairs have wide spreads. For instance, the Euro USD, USD CHF, USD JPY, they have very tight pairs. They have very tight spreads compared to maybe the USD CNH or silver or AUD card or Euro card. And the reason for this is because of the transaction volume that is ongoing in each of these pairs. So the best pairs, in my opinion, that I advise a trader can always look out for to begin with is Euro USD. The Euro USD, according to the Bank of International Settlements, the BIS, Bank of Central Bank survey and research, the Euro USD accounts for 24% of the total volume traded in the forex market daily. USD JPY accounts for 13.2% of the traded volume daily. GBP USD accounts for 9.6% of the traded volume daily. AUD USD accounts for 5.4% of the volume traded daily. USD CAD accounts for 4.4% of the traded volume daily. USD CHF accounts for 3.5% of the traded volume daily. And these are major forex pairs. So you can choose between these pairs: Euro USD, USD CAD, USD CHF, USD JPY, GBP USD if you want. The USD CNH is a no-go area. NZD USD, no-go area, because they have less volume compared to others. GJ, I don't advise that. Silver, I don't advise that. Gold is for investors. Gold is not for beginners or intermediate. Euro JPY, I don't advise that. DXY, you can just use it for an analysis to look out for where the dollar pairs are going to head towards. BTC USD, if you're a crypto trader, that's left to you. So you can choose from this. In fact, some traders do well with only monitoring just one pair. Some do well with monitoring 2 pairs. Some do well with monitoring 3 pairs. Some 4, some 5. So depending on your individual personality and individual differences, you can shape whichever pair you would want to follow, you want to look out for, because the movement of each pairs are unique, just as each individuals have unique personalities. That is how the movement of each pairs are. So as said earlier, more is less, less is more. To recap all we have said, these pairs here, they are the major pairs, and the major pairs, they have an advantage because there are more trade opportunities on them. They have clearer movements, they have better spread, tight spread, and they have liquidity. So these pairs, they move very fast, they have tight spreads, and you have lots of opportunities on them. Although aside from the USD CHF, which ranges a lot of time, it is usually in a lot of accumulation, which I love because I love trading ranging markets. Money is made in the ranging markets because after the range, then you have the trend. So that's why USD CHF is one of my favorite pairs that I look out for. However, if you are a trend trader, I advise you follow maybe Euro USD, GBP USD, USD JPY, and gold if you have investors' money, because they do not range that much, they trend a lot of the times. So I hope we have gotten rid of the paradox of choices and we are able to narrow down our choices to the pairs that matters, to the decision that matters. And I assure and guarantee you that if you do this, there will definitely be a drastic change in your approach to the market. So leave aside the exotic pairs. The majors are enough to give you the opportunities you need to milk the market. And mind you, even the exotic pairs, they follow the majors. In fact, you would have had maybe 5-6 opportunities on AUD USD before you have one on NZD USD or the likes. So that is my piece of advice. Plan your trade, trade your plan, and most importantly, manage your risk and emotions. If you find this content useful, like, share, and follow for more.